following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and that rockin' theme music means it's time once again for the Option Block. My name is Mark Longo from the OptionsInsider.com as well as the Options Insider Radio Network, and this is a fun week to be starting off here and kicking off the old trading week with the Option Block. And I am joined today on the all-star panel by our usual rogues gallery of contributors, starting off with the man with the day in his name, good old Monday Mike from Know Your Options Inc. I'm talking about Mike Cavanaugh. Mr. Cavanaugh, welcome back to the show. It's been a few weeks, sir.
It's been a couple weeks. I know George took my place last Monday as Monday George, but Monday Mike is back and ready to talk options.
I'm trying to recall, is this your first show of the new year?
I do not believe. I believe I was on the first Monday show.
Were you on the first Monday show? Oh, so then a Happy New Year would be wasted upon you then. I will not.
I was on the 9th. That's a lie.
There we go.
This is my first show of the year.
So I retract my Happy New Year to you, sir. Take that.
It feels like it's been about a month for me.
Yeah.
But we had the holiday week last week, and then George was on for me on the 9th, and then we had another holiday on the 2nd. So we've only had half the Mondays of the year so far.
Now I know why you picked Mondays and gave Thursdays to Tusaws, because you wanted all the holidays for yourself.
Mwah.
And we are also joined by a mystery guest here, holding down the OX seat. I have no idea who it is. Could it be Rob, Tim, or John? I don't know. So announce yourself, mystery guest holding down the OX hot seat today. Who do we have?
All right. Well, this is Tim at Options
Tim.
Express.
I was betting on Tim, but I didn't want to lay all my chips. I didn't want to show my hand just yet. I was thinking it was Tim. Tim, welcome back to the show for you as well.
Yeah, thank you. I think I missed last week. We were pretty busy last week, but yeah, I got real excited to do the show today. So,
was something going on with options last week? Was there something going on towards the end of the week that may have required your attention elsewhere? I don't know what that could have been.
Yeah, that expiration, first one of the year, so it was busy.
All the fun questions calling in. Why am I 30 handles through my short strike, and what can I do to to close this out?
I got an email. Am I supposed to do anything?
Right. Yeah.
I had a margin call that was due 3 weeks ago. Can I do something on that now?
Yeah. So it was good. It was good. It was a good learning experience for everyone. So.
And I won't waste a Happy New Year on you either, because you've always also been on the show for this year so far. So no wasted Happy New Years for any of you. We'll just get right down to business. We'll probably be joined later in progress by the Sea Monkey, a.k.a. the Sea Bass, from Slinky.com. We'll see if he joins us en route. But with the team mostly assembled and the game afoot. We will dive right into the trading block.
The trading block.
All right, and welcome to the trading block. This is, of course, the portion of the show we discuss what was trading, what was lighting up the tape, what was moving the markets today. And there wasn't a heck of a lot moving those old markets today. The Dow closed down nearly 12 handles to 12,708. The S&P closed up, a whopping 0.62 to 1316 even on the S&P cash, and the NASDAQ down nearly 2.5 handles to 2784. And the good old VIX cash looking up for a change to the whopping 18.68. So volatility storming north. Watch out above.
Volatility's back.
Here it goes, baby. Right back to 40. You heard it here first. Yes, so a lot tearing up the charts in the old markets today. And of course, what we saw was a lot of meh today because everyone's kind of sitting on their hands for a number of reasons. We have a lot of earnings coming out down the road a little bit this week, tomorrow actually, with quite a few of them, but also a lot of discussions going on in Europe, as usual, about what's going on with Greece and Greek debt and maybe swapping that deal out a little bit. So that's keeping a lot of people in neutral as well. So that tended to really put the damper on any serious action in the market today. We saw a lot of fluctuation, not even fluctuation. We saw a lot of just kind of meh as we were waiting for the rest of the week and some of the other activity to unfold.
This is Mark Sebastian
yes.
coming at you live.
This is K-Rock 107.9, the quiet storm.
It's Eddie and Jobo with your United Auto Insurance. Hey!
And listeners, if they can't tell, that gregarious, kind of silly voice is good old Mark Sebastian joining us in progress here in the old trading block. I was just about to throw it out to the crowd here, Mr. Seabass, about what they were watching today because it was pretty much a resounding meh in the old market. So whoever wants to take it can run with it first. Mark, Mike, or Tim, battle for the ball. Commence.
Well, I mean, these are
you let Mark beat you to the punch. I was hoping.
I'm always beat these slow guys. Are you kidding me? Well, I think we've got a couple of things. NASDAQ's going to be continuing held up by Apple earnings. I think that's a major thing that we should be watching. And S&P's kind of this Greek thing, I think, is hanging a little bit over. We've had a nice rally. I love these breather days after a good rally where we're kind of shortly up, we're just up a touch after several days of being up 7, 8, 9 points a day. This is just a continuation on one of these low vol rallies that I adore seeing, and it just continue to point toward a bullish market. We've got the VIX net basically in today a little bit if you adjust out the weekend. And the market up a touch. This is exactly what you want if you're a long-term investor or even a short-term trader. The only people that hate days like today are futures traders.
Or a lot of options guys who want big bang for their buck every day of the trading cycle, but doesn't happen every single day. Of course, a nice breather like today. Like you said, this is of course the calm before the storm. Tomorrow, lots of earnings on the docket. We'll get to that, of course, in around the block, but a lot of stuff to be watching. Uncle Mike, what in particular, if anything, caught your eye in the endless action that was the market today?
Two things caught my eye. One, the relationship between the S&P and the VIX, which is a constant evolution relationship. The VIX was up and the S&P was up, albeit 0.6 of one handle. The S&P was still up. So it always kind of raises the red flag to me. Hey, if the VIX is up and the S&P is up, what's going on? And if you look back at the last 10 times something like that's happened, the next day is more of a telling sign. So the crystal ball here is saying I'm leaning a little bit to the sell side for tomorrow.
There actually are stats out there that if on days where S&P is up and VIX is up. Statistically, we are likely to be down the next day. One of the things you have to watch on Mondays, and actually Monday is statistically the day when the S&P 500, when VIX is up the most. Kind of an interesting thing. And it's a combo of the weekend effect, and it's also the fact that typically Monday is when, the weekends are when bad news comes out. And so, yeah, Mike, I think, especially on a Monday, today is not going to be super telling. If we see another day where that correlation breaks, and I love that you point that out, Mike, that is so insightful.
That's what I'm full of insight.
That's why we call you Mike, the insightful Kavanaugh. You're like a dragon, the way you look into the world's heart.
That's what I feel like. I feel like a dragon.
Someone's been reading a bit of fantasy literature on the weekend. I think.
I had some jalapeno beef jerky for lunch. I feel like a dragon.
That could
nice,
be it as well.
Nice. I've been I put on that on demand for my kid when he's watching like Sesame Street or something like that, and they keep showing this terrible, what do they call it, Japanimation or
the anime stuff.
Anime.
Yeah, anime, and it's like the insane things they say on anime. What I just described Mike as would be logic for anime, But anyway, getting back to Mike.
No. By all means, let's go down the anime rabbit hole. Our listeners,
let's call it the anime block.
Our listeners just really want that. Tell us about their big googly eyes too.
Mike, your strategy is very simple. According to my calculations, that strategy seems very weak for a guy like me. Ha 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 ha.
That premium is much too high. Perhaps
Yes.
I could trade a smaller premium option.
Yes, I could see your premium sale coming from a mile away. Your premium selling skills are weak compared to mine.
Now all you need is a cheerleader jumping up and down in a very skimpy outfit, and then the picture is complete.
Yeah, no kidding. But anyway, no, the thing that Mike points out that I think traders should really focus on, too much time is spent talking about the VIX, and you and I have talked about this in detail, but the way the VIX moves with the S&P is the most telling sign of impending doom or impending beautifulness that can possibly be out there. So that's my opinion.
As we're speaking, I'm just perusing for some intriguing earnings that are going on after the bell right now, and not a whole heck of a lot lighting up the tape right now. Good old Texas Instruments, the old the big name back in the 80s with the calculators and the graphing calculators and whatnot. And they're still around making a lot of interesting chips. They're coming out after the bell, and a whole lot of nothing going on with them right now. Good old Zion's Bank Corp, too. I don't know if you know those guys. They've done kind of their version of corporate options and ways to trade those things.
Zion Bank Corp?
Yeah, they do these.
Is that where Neo does his banking? Neo and Morpheus?
I forgot the name of what they called that product they had, but they listed something a couple of years ago that was kind of their.
Morpheus only does his banking at Zion.
You're on a strange tier today, sir. What were you watching? What were you consuming over the weekend? Might be a better question.
No. This is all. I'm high on Mark Sebastian.
There we go.
That's what it is.
You're taking your own supply, literally in this case, Mr. T-Knob. What was lighting up your OX personal tape today?
Well, you guys described it pretty good. I mean, trading is pretty light. People are just, having a wait and see kind of attitude. Anyone who was short not too long ago are, they're out or just not very happy right now. So, other things that are sort of, piquing some interest just around here. I mean, everyone seems to be taking a shot at this natural gas. I mean, we're really getting a lot of orders, and a lot of people calling up, kind of new to futures, or they just want in on this natural gas. So that's one thing that's kind of coming in.
Tim, they all want in on your natural gas. Is that what you're telling us?
Yeah, they do. People are along the gas. They want to get along the gas.
The children are trying to bring down the discourse again.
The euro, the dollar, gold, those things were pretty active today.
Yeah, I'm just looking here, and not too much. Mr. Kavanaugh, anything happening in your in the world of metals that was lighting up your tape today, or
not
Uncle
a whole
Mike's?
lot. We've got a keen eye on the silver SLV silver futures right now. We've got a long position on the SLV that we fairly active on Friday. It moved up sharply. We moved our collar up with it, so we're still long silver. And the 34.5 level is a level we're keeping our eye on, and if we pop above that, it might be high ho silver. But right now we're still looking at the 27 to 34 range is kind of hanging tight. Natural gas, as our brother T-Nav pointed out, it's
Yes.
definitely a point right now of interest. The market's just gotten brutalized. Fundamentally, the warmer winter has just driven the price down. So you got a lot of bottom pickers out there looking at different strategies. Bottom pickers, natural gas, insert.
It just never stops here.
A field day.
I mean, I feel. I mean, this is the best day ever for me.
Are you back in your glory, sir? I'm glad we could oblige you and all the Mark Sebastians in our audience who are just sniggering in their headphones right now and chortling maybe. And just someone right now on a bus or subway is listening to this and laughing inappropriately and making the person next to them very uncomfortable. And I'm proud to say,
they're LOLing just listening to this.
I'm proud to say that we are the cause of that. we aim high
Tim
here.
pointed it out. It's actually the natural gas market took a little bit of a pop. So there is that in any kind of commodity market. It's got the inverse skew of the equity market. The skew is to the call side. And you get short squeeze rallies in a market like natural gas. And if you've got the intestinal fortitude to weather the fact that there are no fundamentals supporting a bull move right now, but short squeezes are fast and furious when they happen, it's not a bad thing to be keeping your eye on. Picking spots, and don't get married to the long side because it could definitely continue its way south. But the short squeezes are definitely interesting. Then lastly, the thing we were looking at was Google. I know the earnings came out on Thursday, and then you got the bulk of the move right after the announcement came out. The Google closed at 6:35 on Thursday. Within 2 minutes after they announced their earnings, it was trading around 570. So you had a 65-point move, and the at-the-money straddle for January was trading at $35. Kind of looking back, 8 out of the last 8 Google earnings, even there's beef in that at-the-money straddle. It's traded outside of that projected straddle. Like, I think it's been 8 out of 8 times. I'd have to look back, so don't quote me on that. But you could have doubled your money pretty quick on the buying the at-the-money straddle. So all you hardcore premium harvesters out there, Mark Sebastian's tagline, which I'm going to copy, is you're a premium trader, not a premium seller or a premium buyer. You kind of have to look at objectively, is it a good time to sell a straddle or buy a straddle, get long premium or short premium? But Google's definitely been an interesting play the last 5 or 6 earnings plays.
Yeah, we chatted about that in the last show, actually. We typically don't often recommend buying premium going into, or straddles going into an earnings announcement, but I think all of us on the show pretty much agreed that it takes just stones of iron to go into Google earnings short at the money premium right there, or anything along those lines.
Yeah, it's funny. I was talking to a potential, and he's like, I go in and I sell the 576. What was the 570 680 strangle? What's wrong with that? That was exactly what he said. And I said to him, well, there's nothing wrong with it per se. It's not within my risk profile. And he couldn't quite understand that. That is a trade that's going to work, and then Google's going to 9/11 him, and he's going to be like, it'll Netflix him so bad
I was just going to say, show him the Netflix chart, and you say that's what's wrong with that. There you go.
Netflix, Elan, Marshall McLennan, RIM. There's all sorts of things happening, and you never know. There is so much. A company like Apple, if they actually came in and missed top line, the amount of destruction that would be laid into that stock would be unbelievable. I mean, that's the scary thing is, a company like Apple, they do everything they can to sandbag. But what if Apple came in tomorrow and missed top line revenue? by, or even just came perfectly in line with top line revenue estimates, what do you think would happen to Apple? How much would it be off? 50, 60 bucks?
I'd say 40.
Yeah, at a minimum,
It'd probably be in the 10%, close to 10% range, yeah.
It's off $40 if they absolutely meet expectations. It's off $30, 25, 30 bucks if they just hit expectations, if they don't beat. It's if they just beat by a little, it's mostly unchanged. If they missed, I think you'd see, if they missed, and then, I think you'd see Apple down, 20%. I think it'd be that simple. Maybe 25.
I saw a lot of bloodshed on Friday from Google. A lot of people, that had been selling premium for a long time had no problems. I mean, they were short some puts, and it wasn't pretty. It really threw a lot of people off.
Did it? I didn't watch the opening print on Google. Did it open down at the low end of its range, or did you really have to scalp in the overnight to get the max end of that range if you were long to premium?
Yeah, overnight it just crushed. Overnight it crushed a lot of people, but by the open it actually picked up 15 bucks.
Yeah, it was about $15 higher than the overnight on Thursday.
So another good reason to be scalping if you're long premium, to be scalping in the after hours.
Yeah, absolutely. Well, and another way to look at it, I mean, so the at the money, you're like, wow, $35 for the call put combo. I don't know if I want to pay that much. Take a look at, well, if the projected range is 35 up, 35 down, you're of no opinion if it's going to go up or down. It's at 635. Buy the strangle, buy the 670, 600 strangle, pay $8 or whatever it is, and see if you can't hit one.
Yeah, and pick a direction. I mean, these types of stocks. If setting something outside of the strangle price that's like a put spread can actually end up being done for relatively inexpensive most of the time. I think at this point we've established which direction I think Apple's moving. I'm in the, I managed to get myself into the 390, 380 put spread for, almost nothing. And that's something cool that you can do. When vol's really high and when things get kind of out of whack. It's one of my, I've got that 395, 385 put spread on for like $1. And, that's a nice thing to be able to do. Puts it kind of right at the straddle. You're taking advantage of the fact that out of the money put is going to get smoked if it moves to the straddle. And so they put you in a position, the way these things trade, especially in these high crazy stocks, they really put you in a position to win it. You just have to be willing to take the baton,
Take the baton, says Mark Sebastian. Yeah, we were chatting about that causes all sorts of more snickering, I'm sure, from our listeners.
That's what I said to my wife last night.
Someone right now is looking at the guy in front of him at the bus who's chuckling inappropriately and saying, "What is that guy listening to?" And now we
might have to get a rating for the show. Censors.
Inappropriate for all audiences.
Do you think this show would get more listeners or fewer if we got that explicit rating?
I don't know. It might open us up to a whole new late night audience that never considered the Cinemax After Dark type audience that never considered an option show to be part of their repertoire, but it has been lured in when they sort for only explicit shows in iTunes. But yeah, it is an interesting time to be looking at long premium stuff. We talked last show as well about, I was eyeing that, I think it was the 425, 400, 445 or so iron fly in Apples because the vol levels have gotten so ridiculous out there that you could put that on before earnings and use a number of ways you can get out of that would be profitable.
Mm-hmm. You could put on Google I literally bought a bullish butterfly in Google for nothing. And now it ended up going out worth nothing. But the ability to do that for just a commission cost is not something you should be able to do. And these high-flying stocks will get that screwed up. You can play the paper heavily leaning one option against another.
Good old paper flow. It's just it's the spice of life here in the land of options. And I think with that heavy discussion of premium buying, which is a rarity for us, particularly going into earnings, a double rarity for us. I think we're going to close out the old trading block, leaving a lot of our listeners with some interesting questions, perhaps a few inappropriate chuckles. And we'll dive right into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
No, that should almost be the opening of the show, not just the odd block.
You like
Don't
it?
you think?
It's got a funky tune. All right.
Yeah, well, we instead of the trades, it'd be the hosts that are downright questionable.
Yes,
that'd be the way I would do it.
That's a given. All right.
It's implied.
And
right.
welcome to the Odd Block. This is, of course, the portion of the show where the hosts are questionable, but the information is fantastic and endlessly useful. And we're going to kick things off in the old Odd Block today with some activity that went up on Friday, which was in Melco Entertainment Inc. ticker symbol Melco Entertainment Inc. ticker symbol MPEL, M-P-E-L. Say that one 5 times fast. And they listed under Melco Crown Entertainment. So Melco Crown, Melco Entertainment, call them what you like. They're a Hong Kong-based casino operator. They closed today at $11.31, up about 13 cents, or about 1.5% on the day. This is the name that usually does about 4,000 contracts of late. They did nearly 8,000 today. But today's activity wasn't what particularly caught our eye. It was Friday's activity, where we saw nearly 7.5 times their ADV going up. Primarily in call options, we saw about 27,000 calls going up on Friday and about 1,000 puts going up in good old MPEL. The top trade was someone coming in and scooping up 12,600 of the April 14 calls for a whopping 35 cents. And those guys are still looking pretty good, trading 30 at 40 today, so they're right in the center of that range. At the end of the day, a total of nearly 14,000 had gone up, with an open interest prior to that of about 750 contracts, so all predominantly opening paper. Also saw buying activity in the April 12s and April 13s. As our analyst goes on to say here, there's no news that really came out to explain any of this explosion in upside activity here in MPEL. It was just a flurry of love. We're seeing people looking for a big gap up through the middle of April. There is earnings coming in this name in about a month, but this is not specifically an earnings play. You could play much nearer term if you thought this was going to be just an earnings play. So it was just another one of these Asian names lighting up the tape on little to no news and causing a lot of furor in the process. Any of you guys have a chance to catch MPEL on Friday?
Nothing.
No, but a little follow-up activity today. You just never know with these things. It actually could be somebody setting up a short position, buying calls against dumping the stock. But, we just don't know. That vol's got some nice juice to it, though. That at the money's over 50. So it's a stock with some teeth.
Yeah, it's definitely an intriguing one. 70s. And I see, Mr. Sebastian, you are nominating another name for our odd block today. One of your Sebastian favorites, a sub $1 pharmaceutical.
I like to call
I'm looking at the tape here right now, and this is just ridiculous.
I know. I love these.
70,000 $1 calls went up in this one. I'll let you run with this one because this is a Sebastian.
Well, the best part is this is ALXA, Alexza Pharmaceuticals, Alexza, spelled ALEXZA. That sounds like
the database.
Naming your firm Alexza. Every girl I ever knew named Alexza ZA was like the slutty daughter of two really, really hippie parents.
There we
it's
go.
Like, hey,
back
let's
into the
Alexza over.
back into the Cinemax After Dark territory we go.
She's down to party. No, I mean, a name like Alexa basically states I'm down to party.
There you go, all parents of daughters out there. Be forewarned.
Yeah, this is clearly a stock that's down to party, trading 77 cents. It's like, what do I want to do? Do I want to get a a small cup of coffee, or do I want to buy a share of Alexza Pharmaceuticals?
Is this a size time spread here, or is this just some crazy time stupid we see going up 70,000 times?
I bought, some guy buying everything. I think it was 1 month, and then they followed up with another month.
So they bought both of these, and they bought, listeners, if you don't know, 35,000. This is a name that closed at 77 cents today, down about 4%. And 35,000 of the March ones went up, as well as about 35,000 of the June ones. It's like a two-saw-sized stupid. Stupid.
Doesn't get any better than this. Yeah, that looks like they paid a dime and 40 cents. And, maybe it's a time spread. It could have been a guy rolling because there's some big open interest on the March ones. But it's clearly a continuation or an opening of a heavy long position on a 77-cent stock. Well, take that. So, Mark, would you rather own 100,000 of the ALXA shares for 77 cents? Or would you rather pay 40 cents for the one call? How ridiculous is the buyer of these calls? I mean, that's just silly willy-nilly. Makes no sense. Just buy the stock.
This definitely falls into the dubious portion, the questionable portion of our odd block descriptor there. It is our favorite part of this. These type of trades are exactly why I love the odd block. And KBH, oh yeah, somebody bought 10,000 KBH. No. The fun is Alexza, our down-to-party pharmaceutical, and their heavy call buying. Well, that certainly puts the kibosh then on what I was going to finish out the old odd block with, which was an Irish diversified machinery company. I'm not sure if that's as fun, but we'll try it out. The Irish know how to have fun as well.
I feel like Alexza would be one of the roommates on Jersey Shore.
You just love the name, and you're just going for it. But yes, we're gonna close up. Thank you for that, Mr. Sebastian. Quality stuff as usual. I love it. Yeah, that's talking about the size money not being the smart money. There you go, Alexza, exemplifying that pretty much exactly. And then we're gonna finish things off with Ingersoll Rand, ticker symbol IR, closed today at about $34.66, up nearly 2%. On the day. We also saw some interesting activity on this one. This is a name that does about 3,000 contracts a day. They did about 8,000 today, and even more than that, about 12,000 on Friday. After nearly 11,000, about 11,000 puts and only 1,000 calls went up on Friday. So a lot of beers coming out to play here in IR, particularly in the Feb 32s. Nearly 11,000 of those went up on the day. A lot of them in weird increments, but the bulk of them went up for about 90 cents. About 3,000 of them went up for that price. When people were lifting offers, that was right on the offer there. So the previous open interest only 92 cents. So a lot of opening paper coming in to open up on the short side here on IR, and the Feb 32 puts, like I said, total of about nearly 11,000 going up on the day, which is almost 4x the ADV in and of itself on that one strike. Could be, we have earnings coming out in this one on the 8th, so this could be a hedge before earnings. This could be an earnings, straight up earnings spec. Looks like it could be an underlying guy looking to hedge some of exposure, if I had to guess, given the outright size of this trade. But yeah, some big bearish paper, or at the very least, a big hedging paper coming in to hedge his Irish diversified machinery exposure going into earnings. Any of you guys lighting up the tape here on IR before we close out the old odd block?
I am not.
Kavanaugh, a name like Kavanaugh, and you're not trading IR on a regular basis. What's wrong with you, sir?
Right.
No, the only thing Kavanaugh has to do with Ireland is Guinness.
And the occasional Harp and Smittix.
Pretty accurate.
Blood pudding.
Blood pudding, yes. Delicious fare always at the Kavanaugh household. I recommend everyone swing by for a nice dinner meal with the Kavanaugh family. Blood pudding. All right, that is going to do it. Before we get way off course, that is going to do it for the old odd block today. And now we're going to dive right into the Xpress Block.
The Xpress Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and that tune, that reprise, if you will, of our theme means it's time once again for the Xpress Block, where Mr. T-Knob takes the reins and runs with them, and indeed runs amok with the show. So, Mr. T-Knob, what is going on? My little birdie on my shoulder is telling me that the like you said earlier, the Google put sellers, the widowmaker struck yet again for OX, this time in Google land.
Yeah, it was it was unpleasantly surprising, I guess is maybe the word. Some people that I'm used to talking to, they're very good on the phone. They know how to place orders. They're always aware of what's going on in their account. And they were short puts in Google. And it was just it was a nightmare. It was a living nightmare for them. I know some people had some, short 585, 580 put spreads. And, all of a sudden, 45 minutes before the close, I think it was maybe 582. And they were trying to roll, the put spread into the next months, and they were getting confused with, this a debit, is this a credit? I'm doing 4 legs. How come I can't open and close on the same order ticket? It was a mess. And then the stock closed over 585. So, it just goes to show you that really there's nowhere safe to hide at any moment. You think you've got something going so that's a no fail. Well, the one time it fails, it really does hurt you. So,
Google,
yeah, I mean, that was just, some of my experience from Friday with Google.
This one, I can't imagine this came as too much of a surprise to so many people, because like Uncle Mike said, or I should say Monday Mike said, I mean, this one has burst through its straddle range for a significant number of its recent earnings announcements. So the fact that Google is a bucking bronco that you may want to be hesitant to short going into earnings shouldn't really come as a surprise to a large number of people, I would think. If you're playing Google on a regular basis and you're surprised by an extreme swing in the underlying, then where have you been?
Yeah, I mean, exactly. I was surprised to see people short, put spreads on Google on Friday, because it's what are you thinking? This thing moves. But they were there, and I don't know too many of them who were very happy with that position and how to get out of it. So, again, it just goes to show you that, always be prepared. And I sort of say that from the approach of, when the trade goes against you, how are you going to, what are you going to do? Because, I sat on the phone with a lot of people who weren't giving me orders, but trying to talk to themselves and how they were going to repair the strategy, repair their, position, whether or not to just, get out, what just happened to my account kind of thing. So, again, I talked from a broker, I was on the phone a lot saying, what's your order? What are you asking me? What can I do for you? And, a lot of hesitations. There weren't too many people that knew exactly what to do when they were short that put spread, and it just, kind of blew up.
Yeah, those are tough. We've had some of those before in the past, and there's really no perfect example,
right?
Especially if they're new to trading in the last 8 months. And they got introduced to a put spread as a high probability trade that, hey, you're going to make money 80 to 90% of the time. And however they get introduced to it, they're not told, and that 10 to 20% of the time when you're wrong, will rip your face off and you'll be down more money than what you were making when you were up 80 to 90%. And the exit strategy is very important. there is no perfect thing. I was going to ask you, do you find when the people say, well, I didn't know that could happen, do you kind of stretch out their time frame to say, hey, look, instead of selling 10 more spreads, why don't you just get out of the thing and take a look at selling one cash secured put? It gives you a lot more flexibility. Or is that something on the trade desk you're more just taking the orders and help out?
It's exactly what I did, actually. When I was asking them, explain to me your reason now for rolling over into another put spread, they didn't have much of a reason. And just to keep it short, I just told them, get out right now. You're going to try to mess around with this spread, with another position in another month. You're not really thinking straight right now because of the current position. That's going to affect the position that you want to have. Get out right now, then reevaluate and get back in. I mean, you can still trade. There's still an half hour left of trading. But, when you start to mess around with the current strategy and position into another position, it just gets very difficult to price, difficult to understand, to see the risk, the reward. I mean, you're just so involved with the current trade that it's just went against you. It really kind of fogs up the strategy going forward. And yeah, I mean, many times I would tell people, look, there's nothing wrong with being bullish Google right here, right now. That's fine. And there's plenty of ways to do that. But, for what you have right now, you kind of just step out and then, look at other positions going back in.
Yeah.
That's got to be
good. I think people fall into the trap with that front month losing spread moving to the next month. I mean, the common mistakes I see is, well, let's say you sold it for $1 and you get out for $5. Well, if I go to the next month and sell something for $5, I'm even. That's their mindset. Well, then to get ahead, I'm going to, instead of doing 10 contracts, I'm going to do 15. So now I'm not even, I'm up money. But they fail to realize the fact that, no, you're down $4 and you just increased your risk by 50%. And when you tell them that, it's like you just said, I'm coming to your house and I'm pillaging and I'm taking your firstborn. Because they have that impression that, well, if I just roll a $5 debit into a $5 credit and increase the number of contracts, then I'm still going to make money. They don't look at it as, I still have a bullish outlook over the next 35 days and I've increased my risk 50%, and I actually just lost $4 on a spread. They don't look at it like that, and I think they really need to.
Yeah, no, you're exactly right. I mean, people would say, well, they wouldn't even think that the trade, the front month trade really was a closing position. I would say, you are booking that loss for the front month. Sure. Do you understand that? And they would sort of hesitate. And then I would say, no, that you are booking that loss and you're going to go take on more risk, essentially. And if your outlook wasn't right, a few days ago, what makes you think it's going to be right at the moment? Have you really done the necessary evaluation? So
yeah, that term roll kind of implies, I'm going to live to fight again here. I'm just rolling my losses to another month. This isn't real yet. I haven't booked that loss yet. I'm just postponing it and living to fight another day, when in reality you're booking that loss and doubling down on the next month. It had to be a fun day to fun thing to wake up to. You have a short out of the money put spread, 100 handles out of the money, and you're thinking you're doing all right. Then you go to bed or maybe you don't watch the earnings. I can't imagine why you're shorting Google and not watching the earnings. But let's say you did that, then you wake up the next morning and all of a sudden you now have a short at the money put spread, and you're looking at a margin call that's about a house payment or several house payments in some cases. That had to be a fun thing to wake up to. I can imagine some of the calls coming in were pretty frantic, Tim.
Yeah, and it makes our trading desk, it makes me, I notice it, less efficient. I'm very good when someone just says, hi, here's my account number, and they just start shooting off orders, and maybe I have to override them, maybe I have to do a couple things with their position to manage it and get the correct requirement. That's fine. They don't really need to give me those instructions. I know about that. That's why they're calling me. But all of a sudden now, if I'm on the phone with somebody that has this position and they're not sure what to do, that's not that's not where I can help you out, and you're just losing efficiency with now our calls are sort of getting backed up. The customer's really not going to get the answer that they're looking for. They do need a tutor for something like that, and just I'm here for the orders, really.
That has to be, your job scenario, then the analogy to, sometimes when you're a doctor, you get to go out and save a life and it's a great day. And sometimes you have to go out and give the bad news to the next of kin. I'd imagine the doctors don't relish that part. And this probably had to be the analogy for your job. But days like that, when people are calling in saying, how do I save my house off my short Google put spread, losing my house off my short Google put spread, that can't be a pleasant day on the OX trade desk, I'd imagine.
Yeah, no. And I'm surprised to see that, not only do they do it in one account, but they do it in, more than one account. And, that doesn't make too much sense to me. They're taking on risk in one account, and let's just spread that risk all over, to the other accounts. Why not, do the opposite in some of the accounts or take, you know what I mean?
Yeah,
not necessarily
if it works for one, then why not do it in all? Why not,
Yeah.
That's just you're just as you keep describing these trades, it just sounds more and more awful to me.
And again, they need a tutor. They need someone to talk to. They need an advisor. That's what they need. But they don't need me on the phone because I'm here for an order. I'm going to charge a commission and get the order filled, and that's what I do. I can't really talk to you right now. I have to give you the news that the account's not in very good shape, but other than that.
Lean on Tim when you're not strong.
Tim, part execution man.
Understand your puts and calls.
Yes.
If your account has a shortfall, then all you need is Tim Navabi. What do you think? It's my new.
I think that was pretty good.
There you
Off
go.
the cuff.
That should be his ringtone.
Yeah.
That'll get you on American Idol with William Hung right there.
Have that be your voicemail, Tim, for your desk when you're not away from your desk.
Tim bangs. Tim bangs. Tim moves. Tim moves.
Jimmy got low.
Tim, part doctor, part trading specialist, part priest over there on the trading desk, part confessor.
Brass Timmy, that funky Timmy.
Confess your sins to Tim over there. All right, before we get way too down that very, very silly path, we're going to close out the old Xpress Block. Thank you for that dire picture, Tim. Something for all of us to think about, I think. And we're going to roll right into Around the Block.
Around the Block.
All right, and those honking horns mean it's time once again for Around the Block. This is, of course, a portion of the show where we discuss what's coming up on our trading screens for the next few sessions. And if you've been listening to the show at all for the past few weeks, I think you know what exactly everybody is looking at tomorrow. Tomorrow is the big daddy of earnings, at least for the next few weeks. We've got everyone and their mother announcing tomorrow. We, of course, have the big dog, Apple. We have AMD. There's Ford. A bunch of big names coming out tomorrow. So maybe we'll just dive right in there with the big one there. Apple, are you happy with your positioning going into the big day tomorrow, Monday, Mike?
I'm happy. If anything, I might think we might want to roll our puts up a little, but I'm still happy with, we've been in Apple since I don't even know how long. It's just been collared, and there's just been consistent upward movement. So right now we've got a collar on. Stock's trading at 427. We're long the outright, and we're short the Feb 450 call, long the Feb 375 put into earnings. If we come down, great. We'll buy the calls back. We'll sell the puts, and we'll recollar it. We might go just on a cash secured, whatever they call it, married put, where, we don't sell any calls. We just buy some puts. But yeah, I like our position going into earnings on Apple. I don't see it being a blowout to the upside. So if anything, we might tighten up our 375 puts a little bit.
Granted, we've said this a number of times now, but how much more of a blowout to the upside could it be at this point? The thing just, it's done its pre-earnings rally. all the devotees have jumped right, and the zealots have jumped right back into Apple, going into earnings expecting.
It's up 12% since the middle of December.
Yeah.
I mean, how much more is this thing going to rally on earnings? You know, they are going to have to crush the number in order to rally off of this, and even then, the risk reward of holding without the Monday Mike collar, all right, is just way too dangerous.
It is. Like we were talking to a guy today who's not in the collar that just owns 100 shares outright, still bullish. But what do I do? We're going into earnings, but I'm really, really bullish. And we're looking at the option chain, and you could sell the March 465 calls today for $5.50. That's a no-brainer to an Apple bull, in my opinion, but it doesn't really do anything for you on the downside. So when do you get bearish on Apple and actually say, you know what, I no longer want to just hold this stock without protecting my downside? And I don't know if now is the time, but it feels like every time you go into earnings, like why take the risk of not having something on?
That's the downside of being sucked into that cult of Mac, is that not only does it make you want to buy the stock at these perhaps ridiculous levels, but it makes you less inclined to pick up that protection on the downside. Because how could Apple ever disappoint? They are the next coming.
When they'll disappoint.
Well,
the next computer is called Tulip.
Here's a classic example of how Apple can disappoint. I just got a phone call from my wife. I muted myself briefly. Now, I've had a dog for 3 years. In the 3 years I've owned her, she's never, even when she was a puppy, she only peed inside once or twice, has never dropped a deuce in our house. Well, my wife just calls me on the phone and says, our dog, Daly, just took the biggest poop in the middle of my son's bedroom. Apple could be much like my dog and just take a huge, huge poop in the middle of your portfolio's bedroom. And it will just do that to somebody someday. All right? Every good company eventually stops being incredibly great, and just becomes a good company. And it will happen it will happen. So
but
don't let Apple
look at that and they say, yeah, but what solves that scenario is they're working on iDog, and they're going to have a dog replacement that's like an iPad, except it's iDog, and it'll never take a crap in your house.
Oh, nice. Well, obviously
your iHouse. Wait till they come out with iHouse.
Yeah, all I would say is, and I'll say this 100 times, people, Apple owned the PC market with the Apple IIe, and within several years was basically almost out of the PC market and almost out of business. So don't forget that. This company has had a couple of roller coasters.
Mark Sebastian, long tons of Apple upside. I
just own some protection in case Apple takes a poop in my kid's bedroom.
Yeah, I think the moral of the story, we've been talking about getting long premium for earnings here, and the moral of the story is if you are long any sort of underlying exposure to Apple, I'm sure a lot of our listeners are, and you don't have any sort of plan for hedging that going into earnings, any sort of collaring, as the boys at KYO are so fond of doing. If you're not going to do anything like that, then you really are playing with fire, because this sucker could pull a Tim Navabi and move to the Google dark side. Maybe not this earnings, but sometime in the near future. And it could be a painful, painful morning for all of us to wake up. Of course, Apple, not the only big player announcing tomorrow. I think that number one candidate on the Wheel of Fun, good old Ford, announcing tomorrow. Now, how great of a Wheel of Fun name has Ford been, Uncle Mike? Or I'm sorry, Monday Mike. I keep saying that.
It's really more of the there's really no fun to Ford. It's just been sticking there. It's really not a great collar candidate. At $12.66, you can afford, in my opinion, you can afford to be long Ford. And really, rather than collaring this thing, the March 10 puts are trading for 6 cents. If you're long 1,000 shares of Ford, I'd rather buy 30 of the March 10 puts, 3x of what I hold in the stock, and just ride it. Doesn't seem like the greatest collar candidate. And the puts, okay. You can sell the March 12 puts for 33 cents, so you can start to Wheel of Fun yourself into the stock. My Wheel of Fun sweet spot which I guess our company has coined a new phrase for this. It's called the triple income strategy, because Wheel of Fun sounds too sophomoric. But I will continue to call it the Wheel of Fun. I think the sweet spot in the Wheel of Fun is, that $20 to $40 price stock, where there's enough beef in the option. It's not $10 or $400. It seems to be a better sweet spot for the Wheel of Fun.
Yeah, I'm thinking more, maybe not forward at these levels, Wheel of Funning or triple incoming, but perhaps as its range over the past few months has made it a good candidate. You could have gotten into put spreads down at the 10-9 level and legged into some underlying at levels that are absurd, and then you can always flip it to the upside here or hold on to it or collar it off or vertical it off. There's a lot of potentials for fun in that wheel, I think, if you've been trading for it actively for the past few months. And that's always been a fun one. Of course, Ford announcing tomorrow, probably looking to the upside of that, but who knows with these car names. Netflix coming out the day after, the Widowmaker on the 25th. The Widowmaker getting perilously close to the triple digit range again, so there is some potential for erasing some accounts again if the Widowmaker pulls another wipeout like it did a few months ago. So Tim, are people loading up on downside in Netflix again, or are they kind of burned from that train?
No, they're burned.
Okay, well, at least that's good to hear.
Really, you get burned by Netflix or Google. You don't really run back in. I've put a knife in a light socket once and only once, when I was 3. So,
Tim jumping in the colorful and uncomfortable analogy train today.
Oh yeah.
All right, and maybe with that imagery, we're going to close out the old Around the Block segment today, and we're also going to close out this episode of The Odd Block. I want to thank all of my cohorts, my partners in crime, for joining me on the show today. Starting off with you, Mr. Monday Mike, what is coming up in the land of KYO that may interest and or intrigue our listeners?
A lot. Just never-ending intrigueness. Intriguingness?
Intrigue.
Word. Intrigue.
Never-ending wheels o' fun.
The Wheel of Fun, always out there. Dr. George is now updating the blog weekly with our Wheel of Fun ideas, his market insights, the Know Your Options in the Know newsletter. Please check the blog Sundays or Mondays. George is always hard at work, nose to the grindstone, looking at the research in the stocks. Everybody's always encouraged to give us a call. You can set up a one-on-one webinar with Mike Tusaw. We got a lot of good stuff going on. So that's about it.
Thank you for that, sir. And yes. Mr. Sebastian, what is coming up in the land of the pit, aka optionpit.com?
Well, we're going to have another free webinar on February 15th. Which is we have a free webinar every Wednesday before expiration. This time I'm going to talk about kind of some earnings play approaches and how to manage earnings. This is on the heels of we're going to be on Mad Money tonight. I'm sure you can go to CNBC or madmoney.com to catch the video by the time this one comes out. But Jim's using some stuff that I wrote up for him, and if you can go to the website and find out what stock he used to talk about, what stock he used that I wrote up, use that stock symbol as a code. It'll take 25% off our gold course. Here's a hint: starts with an A and ends with an L.
So, do you enjoy being the puppet master, the speech writer for Mr. Kramer? Someone's got to put the words in his mouth.
Kissinger never went to jail. That's all I'll say.
Got close a few times, but he got singed by the fire, but never.
Everybody
never
loves Ben Stein, don't they?
There we go. Everyone wants his money as well, apparently, or perhaps they did back in the day. Well, thank you for that, Mr. Sebastian. And last but certainly not least, Mr. Navabi, what is coming up in the land of Options Express?
All right, so we have got some free events. February 11th from 8 a.m. to 3:30 p.m. Minneapolis, that's a workshop. And then we also have one in Indianapolis. That's on March 10th from 8 a.m. to 3:30 p.m. And those are on our websites under our education tab.
Perfect. Thank you for that, Mr. Navabi, and thank all of you out there for listening and downloading and streaming and subscribing to this show and making it such a success. And we'll see you next time right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.